Alright folks, listen up, we're diving deep today. We're talking Dollar Tree, that's DLTR on your screen. This isn't just some small-time shop. Oh no! This company is a behemoth in the discount retail space. They've built an empire on a simple promise, the promise of incredible value for your hard-earned cash. But the big question, the one you're all asking, is Dollar Tree a stock you want in your long-term portfolio? For years, Dollar Tree was the place for $1 deals. Everything for $1. What a concept. Then came inflation. The world changed. They had to adapt. Now they've broken the buck. Prices are up a bit. Some items are $1.25, some $3, some even $5. This move was controversial. Some loved it, some hated it. But it showed they're willing to make tough calls. The core mission, though, still providing extreme value. This company operates thousands of stores. All across North America, you've got Dollar Tree stores. You've also got Family Dollar. Let's talk strengths first. What makes Dollar Tree shine? Their biggest weapon? Price point. It's still incredibly low. Even with the new multi-price strategy, they're a bargain destination. This attracts a resilient customer base. People always need essentials. And when wallets get squeezed, Dollar Tree looks even better. This low price appeal is a massive advantage. It's their bread and butter. Their calling card. Don't underestimate the power of cheap. Another big pro? Diversified revenue streams. Think about it. They're not just Dollar Tree anymore, they have Family Dollar. This expands their reach into different demographics, different neighborhoods. Plus, they're rolling out more price points, more product categories, from party supplies to food to household goods. They've got it. This diversification helps weather economic storms. If one area slows, another might pick up the slack. That's smart business, folks. Real smart. Now let's not wear rose-colored glasses. There are cons. Big ones. Profit margins in this business are razor thin, wafer thin. Selling cheap stuff means you don't make a ton on each item. They rely on volume, selling mountains of merchandise. This makes them vulnerable to rising costs. Alright, let's size up the competition because they're out there, and they're hungry. First up, Dollar General, DG. These guys are Dollar Tree's closest rival. Head-to-head, Dollar General often focuses on more rural areas, small towns. They've been very aggressive with store openings, very aggressive. Their model is similar: low prices, convenient locations. Financially, DG has often shown stronger same-store sales growth. But DLTR has its unique multi-price point strategy evolving. It's a dogfight. Then you have the giant, the behemoth, Walmart, WMT. Walmart isn't a pure dollar store obviously, but they compete on price. Their everyday low prices strategy is legendary. They offer a much wider selection: groceries, electronics, apparel. Walmart has massive scale, incredible buying power. This allows them to pressure suppliers and keep prices low. For budget shoppers, Walmart is always an option. Dollar Tree has to fight hard for those customers, real hard. Now for a different flavor of discount, Five Below. Five. These guys target teens and tweens, a younger demographic. Everything is $5 or less. Well, mostly, they're breaking the 5 too. Let's pop the hood. Look at Dollar Tree's financial engine. First, let's talk debt. Every company has it. But how much? Dollar Tree took on significant debt for that Family Dollar deal. That's been a weight on their balance sheet, no question. As of early 2025, they're still working to pay that down. High debt means higher interest payments. That eats into profits. It also limits flexibility. Less cash for buybacks or big investments. Their debt-to-equity ratio needs careful monitoring. Watch it like a hawk. Next up, profit margins. We touched on this. They're thin. Gross margins for discount retailers are typically low. It's the model. Dollar Tree's gross margin hovers in the high 20s to low 30s% range. Operating margins are even tighter, often in the single digits. Compare this to Dollar General, which sometimes posts slightly better margins. Walmart, with its scale, can also manage strong margins despite low prices. DLTR's move to higher price points is partly aimed at boosting these margins, but it's a delicate balance. Raise prices too much, you lose customers. What about dividends? Income investors want to know. Historically, Dollar Tree has not been a dividend-paying stock. They've focused on reinvesting profits back into the business. Section 5, Crystal Ball Time. Dollar Tree's future. 2030, 2040, 2050. Alright, let's gaze into the future. Where could DLTR be heading? Projecting out to 2030, 2040, and 2050 is tough. No crystal ball is perfect. But we can look at trends, make some educated guesses. By 2030, I expect Dollar Tree to have largely completed its Family Dollar transformation. Hopefully, those stores will be a source of strength, not weakness. The multi-price point strategy should be well established. More $3 and $5 items. This could mean improved margins, better profitability. Store count might be moderately higher. Focus on optimizing existing locations. Fast forward to 2040. A lot can change in 15 years. Technology will play a huge role. E-commerce, automation, Dollar Tree will need a much stronger online presence. BOPIS, delivery. Their target demographic, budget-conscious shoppers will still exist, absolutely. Economic cycles will come and go. DLTR should remain resilient. International expansion, maybe. It's a possibility for growth, but they need to nail North America first. Get their house in order. Competition will be even fiercer. New players will emerge. Now let's dream a little. Or speculate wildly. 2050. We're talking 25 years from now. Section 6. Blast from the past. DLTR's IPO journey and returns. Let's rewind the tape. Look at Dollar Tree's history. This company went public way back in 1995, March of '95. The IPO price? Adjusted for splits, it was incredibly low. Pennies. Early investors who held on? They made a fortune, a killing. This stock has been a multi-bagger many times over. It's a testament to the power of their business model. For decades they delivered phenomenal growth. Store expansion, rising sales. The market loved them. Wall Street loved them. Comparing DLTR's historical returns to the S&P 500 is interesting. For much of its life as a public company, DLTR crushed the S&P. It was a growth stock superstar, no doubt about it. However, in more recent years, the performance has been choppier. The challenges with Family Dollar, increased competition, margin pressures, these have weighed on the stock. It's lagged the broader market at times. Section 7. The $1,000 question: can DLTR stock hit $1,000? Now for the big one. The question everyone loves to ask. Can Dollar Tree stock, DLTR, realistically hit $1,000 per share? Let's be clear. From its current price around $110 to $120 as of mid-2025, reaching $1,000 would be an almost tenfold increase. A 10-bagger. That's a monumental leap, a huge, huge climb. Is it possible? Theoretically, yes. Anything is possible in the market, but is it probable? That's a much tougher question. For DLTR to hit $1,000, several things need to happen. Perfectly. First, earnings per share, EPS, would have to explode. Massive growth. This means Family Dollar needs to become a profit machine, not a drag. Margins need to expand significantly, way beyond current levels. The multi-price strategy needs to be a grand slam home run, and they need to keep growing revenue, consistently. Year after year, we're talking sustained double-digit growth for a very long time. Think about the market capitalization. What would that mean? If DLTR has roughly 220 million shares outstanding, at $1,000 per share, the market cap would be $220 billion. That's a colossal company, bigger than many current Dow Jones giants. To justify that valuation, the company would need incredible profits and a very optimistic outlook from Wall Street. Section 8. Final verdict. Is Dollar Tree a buy for the long haul? So, we've been through the ringer with Dollar Tree. DLTR, we've seen the good, the low price appeal, the huge store network. We've seen the bad, those skinny margins, the Family Dollar headaches, and we've peered into the crystal ball. What could be? The question remains, is this a stock for your long-term treasure chest? Is it a buy, or a no? The answer, like most things in investing, isn't simple, it's nuanced. Dollar Tree has a resilient business model, that's a big plus. People always look for value, especially when times are tough. This gives them a defensive quality, a moat of sorts. If they can successfully turn around Family Dollar, and if they can make this multi-price strategy sing, there's definite upside, real potential for growth. The company is aware of its challenges, they're working on them. That's what you want to see from management, action. However, the risks are real, don't ignore them. Competition is brutal. Walmart, Dollar General.